Imagine tidying up your home office and wondering, what do I really need to keep? We all want to declutter, but when it comes to tax documents, knowing how long to hold onto them can feel like solving a puzzle. For most tax situations, the Internal Revenue Service suggests keeping your records for 3 years from the date you filed your original return or 2 years from the date you paid the tax, whichever is later. However, when there is substantial underreporting of income, the retention period for your tax documents can indeed extend beyond this standard timeframe. The reason for this extended period lies in specific Internal Revenue Service rules. If you substantially understate your income, meaning you omit more than 25% of your gross income, the Internal Revenue Service has 6 years instead of the usual 3 to assess additional tax. This 6-year look-back period is designed to give the agency ample time to detect significant discrepancies and ensure accurate tax reporting. This also applies if you file a fraudulent return, where there is no statute of limitations. To protect yourself and ensure compliance, it is wise to maintain all supporting documents for any income you earned, expenses you claimed, and credits you took for at least 6 years. This includes W-2 forms, 1099 forms, receipts for deductions, bank statements, and any other financial records that substantiate your tax return. Even if you believe you have reported everything correctly, having these documents readily available can save you a lot of stress and potential penalties if questions arise. Understanding the concept of a statute of limitations for assessments is key. This refers to the period during which the Internal Revenue Service can assess additional tax. For substantial underreporting, this period is 6 years from the date you filed the return or the due date, whichever is later. For general errors or non-fraudulent omissions under the 25% threshold, it remains 3 years. By diligently keeping your tax records for the appropriate duration, especially considering the 6-year rule for substantial underreporting, you are not only preparing for potential Internal Revenue Service inquiries, but also building a strong foundation for your financial peace of mind. It allows you to confidently address any questions about your past tax filings and ensures you are always ready with the necessary proof.